Welcome back. You're watching Invest Africa. We're still focused on Africa's financial services industry, and with me at the desk is Minos Gerakaris. He's head of trade finance at RMB, and Chris Hart is chief strategist at Investment Solutions. Let's pick up on the conversation we were having ahead of the break, but take it to the kind of development we're seeing in terms of product offering to Africans out there. Chris, while you need to plan, as a bank, you need to be nimble enough to adapt as well. What's your sense of the evolution we're seeing in providing financial services in Africa for Africans? Because we speak these days about reinsurance, private equity, and that to a large extent speaks to the deepening of the African financial system.
Very much so, and that's the difference, as you were saying earlier. The armchair, lazy armchair banking is shifting, and though that's a huge competitive disadvantage. Before it was just you milk the profits of whatever it is. Again, I must emphasize each country is different and the circumstances are different in terms of the economic critical mass that they've got in the first place, the development of their business and corporate sector, small business. But the fact is that you're getting a progression of and growth of industries where small businesses becoming medium businesses becoming corporate. Some in West Africa you're starting to see emerging companies that have got even a regional footprint, not just a national footprint, which means it's an important development. So with that comes the need for trade finance more and more. Corporate activity, as listings improve on the stock exchange, you've got more improvement of that business, and so that's on the corporate side. But on the individual side, as more people get drawn into the formal economy, looking at the development of mortgage loans, that doesn't exist across large swathes of Africa. Just a simple thing like a mortgage, which we take for granted, or a car loan, or etc. And all of these kinds of products that come about, that's from the formal banking system. But the reverse is true. The actual experience of Africa is coming up with new innovations that's feeding back into the financial system, as the Cypriots will start to learn under the mattress banking, for instance, will look at products like M-Pesa and that kind of thing, and the ability to transact financially without a bank account.
Yeah, let's focus on a product like M-Pesa, because if you're looking at the Kenyan banking system, we had the big banks historically, to a large extent, having turned their noses up at the unbanked, seeing it or deeming it as too risky, to venture into that territory. And then came along Equity Bank, turned that whole banking model on its head and targeted the unbanked specifically. I mean, surely that is potential that cannot be ignored, given the kind of success Equity Bank has had in a territory like Kenya.
Absolutely. I think all banks are looking to bolster their balance sheets. All banks are looking to grow their liability base and get in depositors. I think the lens that had been placed on the unbanking sector in the past is, how can we lend to the sector? And that isn't necessarily the lens that needs to be placed of it. Also, particularly in the international banks and the banks from more mature jurisdictions, the cost of regulation in terms of banking a client in some of these sectors, in terms of some of the KYC, anti-money laundering regulations, are particularly onerous. So it's striking that balance between providing a service, albeit potentially a basic banking service, and having all the benefits that come as part of a banking system. Yeah,
the challenge of reaching those markets also being done a favor by the advent of technology. So you've got the cell phone banking coming into the fore, and that opening up this avenue in a very immature market. I mean, making headlines the other day, Investec introducing Share Trade mobile app as well. So it's taken a whole new level now.
Exactly, and that's the point, that technology, not driven through the banking system, but it's one of the peculiarities about the South African economy. Why do we have such a strong IT sector? Because we've also got a strong financial services sector that sort of do feed on each other. And the actual, the cell phone companies are obviously blazing the trail. It's just turned the social interaction on its head through Africa, and that's also then opened the door to have a facility to actually access and provide services to populations as a whole, rather than just sort of picking out the cherries, plucking the cherries out of the economy, and if the cherries aren't big enough, you just ignore it. And so you find in that it's helping to facilitate what I call the broad spectrum multi-sectoral growth in Africa, rather than just dependent on resources.
Yeah, Minas EcoBank is a bank that admits that it was a bit too aggressive in its branches, bricks and mortar investment. How do you weigh up the pros and cons here? Because there are two sides of the coin that you've got to look at: a physical presence and then a presence via technology.
Yeah, there is indeed. I think it's also striking a balance between, can you compete in a market? Simply having bricks and mortar in a country doesn't necessarily give you a license to go out there and compete. And you're going against names in country which may have been there 50, 80, 100 plus years, have an established presence, are typically locally owned, and there's a national pride in terms of banking with your local provider and your strong indigenous provider, and the ability to compete isn't always there. So then it is looking for either technology solutions or innovation in terms of how can you cross-border bank that flow. And there it's more often a case of following your customer in, or the bringing to the party what the local banks might not have, and that's the scarce resource of foreign currency. Yeah. So then being able to do the dollar deals cross-border, then you can very practically have a small operation, be it a one-branch merchant bank or a rep office even, to facilitate financial transactions cross-border.
Chris, how do you see the African banking landscape shifting as we move forward? And let's do it, let's say over the next 5 years or so.
I think there's going to be almost three prongs to it. There's the retail side that's developing, but there's also the business, corporate banking.
So your corporate and investment side of things.
That side, but there's also the financial market side of it. In other words, things like broking, stockbroking, capital markets, that kind of thing. The investment banking side, that I think is going to be growing. So all of them are quite embryonic, if one would look at a common tray. And that's basically where it is. So it's really basically quite a lot of growth and potential that's coming through to the fore.
Yeah, I think a theme we would also see aligned to that is going to be consolidation. Yeah. Some markets can't afford to have 50, 60 banks in country. When you look at, say, the South African paradigm, where there's a big four and then ancillary banks around the side.
Yeah, that's where you're going to see the banking sector corporatize from almost being a mom and pop kind of local village type of operation to being something that's got a national footprint. Well, there certainly has been a lot
of debate around one-stop banking solutions versus the streamlining of operations with dedicated subsidiaries as well. Gentlemen, we're going to have to leave it there. Thanks so much for having joined me at the desk. That's all we have time for this edition of Invest Africa. Big thanks to my guest, Minas Gerakaris, who's the head of trade finance at RMB, and Chris Hart, chief strategist at Investment Solutions. From me, Alicia Seckham, it's goodbye.